Did you recently receive a document or some sort of notification about your mortgage's escrow account and you're wondering what the heck is this and what does it mean to me? Well, I can tell you exactly what you need to be looking for on these notices and how they impact your mortgage. So in today's lesson, that's what I want to do. I want to explain to you what an escrow account is, how it works, and exactly what you need to do when you get those notices in the mail to ensure that the mortgage payment going up or down is accurate. Check it out.
What's the purpose of an escrow account?
So what a mortgage escrow account is it's an account that's set up by your mortgage company at the time that you take your loan out. And we collect money every single month out of your monthly payment, which gets segregated into this account to pay for your property taxes, your homeowner's insurance, like your hazard insurance. So they'll take money into this account, and then the mortgage company, not you as the consumer or homeowner, but the mortgage company, the servicing company that you make your payment to every month, they are the ones that have access to that account, and they are the ones that administrate that account. So they will send money out of there when there's payments due. They will take money in from you every month and segregate it out into that account as you pay your monthly mortgage.
What exactly are the different items that could be paid from an escrow?
So the different items that are paid out of your mortgage escrow account is going to be number one, your property tax. Number two, your hazard insurance, which would be the insurance like if your house burned down. And then the next one's going to be, if applicable to you, your flood insurance. So flood insurance is normally only going to be required if you're in a flood zone, which is determined by FEMA. Then you'd also have flood insurance in there.
When do you set one up?
So the escrow account is something that is always going to be set up at the closing for your loan. So when you get this statement called a closing disclosure, which itemizes out all the different accounting that's happening at the closing, the different fees that you're paying, recording charges, etc. One of the line items, or actually there's a whole section that is called prepaid items for escrow account. Those prepaid items is the initial deposit that needs to be put down in order to fund that escrow account. The reason that that account is funding is required is so that there's enough money in there to pay the taxes when they're due.
Where does the money even come from to set up this escrow account?
Another big misconception from people is they think, oh yeah, like the mortgage company pays that or the seller's going to pay that. That's not how it works. Prepaid items for this escrow account are collected at closing and are payable at closing. They're lumped in as part of your closing costs. So unless you've already negotiated to have a lender credit for part of those or a seller credit from the seller of the house you're buying for some or all of your closing costs or prepaid items, the actual responsibility and the money is going to come from you, the homeowner or the home buyer. That's where the money's coming from for that. Again, it's rolled in as part of your closing costs.
Are escrow accounts, are they required for all mortgages?
No, escrow accounts are not required for all mortgages. They are required for some. So if you're getting a conventional loan backed by Fannie Mae or Freddie Mac and you're putting more than 20% down, then you are not going to require an escrow account. It's 20% or more. So if you're putting exactly 20%, that's fine. You don't have to get an escrow account. You can, but it's optional. You get to choose whether you want to get the escrow account or not. So that's on conventional loans. Now, government loans like FHA, VA, USDA, always, without exception, always require an escrow account. If you're interested in getting rid of your escrow account, you have more than the 20% equity, contact your mortgage servicer and see what they might be able to tell you about doing that.
What about some of the negatives of having an escrow account?
There are, and we're seeing it right now today, which is when property taxes go up and insurance go up, what happens is your escrow account ends up with a shortage. So I've seen people whose mortgage payments can go up $5 a month. I've seen other people whose mortgage payments can go up $200 or more per month. Now, if you're working and you're doing well, that's no big deal. But if you're on a fixed income retired, or if you can't pick up overtime at work or have had your hours cut, you may be in a position where even $100 or $200 a month can devastate you financially. So one of the biggest mistakes and issues with these escrow accounts is these shortages, and you have to fix them. And unfortunately, because the home values go up, this is the double-edged part of that sword. The home values go up, but so does your taxes, and now your mortgage does as well. And it may create, again, a financial turmoil for you and your family.
What about escrow refunds, or maybe even getting escrow money back?
This is the bright light of escrow accounts, and this is definitely the biggest pro of having an escrow account, is getting an escrow refund. So there's really only two circumstances that you're going to get an escrow refund, and it's typically going to be when you either refinance your home or sell your home. Now, there is one other way you can get it when they reanalyze your escrow if you put too much money in, but lately that's been very few and far between because the taxes in almost all areas have gone up, not down. The other thing that they'll do, which is I would say more common, is within a couple of weeks after paying your loan off in full, they meaning your mortgage servicer, will cut a check to you for the remaining balance in your escrow account. The other thing is the timeline. An escrow refund isn't something that just comes to you in the mail in a week. My motivation in recording today's lesson was to show you that escrow accounts don't have to be scary. You just need to know what they are and how exactly they work. If you found value in our lesson today, please go ahead and subscribe to the channel. Hit that subscribe button and smash that bell so you get notified on all of our future content. We're putting out tons of new videos and content for you guys every single week. And if you found value in our lesson today, share this with somebody else that may also have questions about their mortgage escrow account. I can be reached for private consultations by either call, text, or private message. My direct line is 860-413-3938. As always, I hope that this helps, and we'll see you on the next episode. Take care.